The Degens, the Wallflowers of old. They're grown up now, no girlfriend still. They have all the time in the world today, and the government is handing out stimmies left and right. What are they gonna do? Start investing and stick it to the man in the investing world. Gamestonk ring a bell? Well, it will, because it's time for Chico Crypto. Yeah, Gamestonk has stolen the hype from cryptocurrency. Major price movements over the past week, and the chart is going parabolic, unlike anything that has happened in stonks since the late 90s, early 2000s, aka the dot-com bust. So what happened? What's a short story of the Gamestonk story? Well, it's retail versus hedge funds. It's a subreddit, WallStreetBets versus Citron and Melvin Capital. So for months now, there has been chatter on WallStreetBets daily and top posts about buying Gamestop stock as a new move. CEO Ryan Cohen of Chewy swallowed up 13% of the Gamestonk shares, which the Degens took as a sign the company was going digital, a pivot that could make the subreddit some sweet gain. But Wall Street, like Amy Winehouse, they said,
No.
Citron and Melvin Capital, they had shorted the stock, and they needed it to drop for those investments to be successful. They didn't see the retail interest coming, and in the past, it didn't matter. Hedge funds always win. And they might have been able to, but last week, Citron Research decided to wage war. They tweeted why it was going to drop back to the $20 level, and would be live streaming the reasons why. Well, it was a miserable failure to stream. Andrew Leff, founder of Citron, was only able to get out on his stream some ramblings about pizza and Tinder.
The people who are ordering pizzas to my house or signing me up for Tinder or doing all those cute things trying to hack my Twitter account.
Look, man,
we're looking at a company with $1 billion. Take your energy, go out there, and actually buy something from GameStop.
All right, man. I'm just gonna leave these here.
GameStop. That's the only thing that saves this.
But after, he was able to get on some other people's streams, and he doubled down even after he saw the wave of retail and what they can do.
Let's talk stocks, people.
All right, let's hit it. You want to talk GME?
Sure, we'll start with GME. So I was going to do a live stream today. It's still going to get presented out. It's just not going to be live anymore. It's amazing what's happened with the amount of retail people have just flooded Twitter, tried to hack my account, and made it very difficult for me to do a live Twitter. I think we had like 180,000 in the first 4 minutes. You know, it's interesting. I thought people would be more interested in seeing how to make money rather than let's just buy a stock. There's like a GME Kabul out there, like people who just want to buy the stock without even thinking of the business. Boy, you know, every day is a new day in the stock market. You might have loved the setup on GME when it was $14 because of the high short interest. There was a high short interest for a reason, because pretty much their business is in terminal decline. But nobody wants to hear that. They just want to buy, and that's wonderful. At the end of the day, this is not a blue sky story.
Well, after that, it was a blue sky story, my friends. WallStreetBets, they joined arms against a common enemy. Since last week, some of the Degens on WallStreetBets declared they were putting their entire retirement and life savings accounts into GME, complete with the memes and insults. And then yesterday, it was on. Elon Musk, he decided to tweet Gamestonk and a link to the WallStreetBets subreddit. And according to Business Insider, after the tweet from Elon, GME ripped as much as 157% higher. Retail, with the help of Papa Elon, aka Satoshi, who did this to cover my yesterday's video, they were able to beat Citron and Melvin Capital. Melvin yesterday announced through CNBC they were closing theirs, and Citron's Andrew Leff announced it on air.
Cover the majority of the short in the 90s, at a loss 100%, have a small imaginable position, and I'll let it go.
He closed it. He knew he was done. A pair of notorious short seller hedge funds got beat at their own game and are even now thinking about the new dynamics that were just created in stonks.
Even though we have been called boomers many times over the past week, we understand the changing dynamics in the market. So with that, we'll become more judicious when it comes to shorting stocks.
So what's the new dynamic? Well, it's called decentralized stock mobbing, and it's here to stay. The internet and never before access to stonks has created this new parallel, and the pandemic helped accelerate it. Young investors with nothing to do and a place to call home, WallStreetBets is now a hedge fund in itself. It's now a stock market force to be reckoned with. So many will be questioning this channel just about now. Tyler Tyler, this is a crypto channel. Why in the freak are you discussing Finance 1.0 and stocks? Well, the narrative right now is screw those Wall Street hedge funds. The narrative soon will be screw the banks that empower these hedge funds. There's such a common parallel between what WallStreetBets is doing and cryptocurrency, specifically DeFi, decentralized finance. WallStreetBets and their decentralized retail fund is scattered, disorganized right now, but it's big. A top 20 fund, some are calling it on Twitter. Just wait once they realize what crypto can do to empower their movement. What can crypto do for these Degens? Have you ever heard of a DAO, a decentralized autonomous organization? The narrative was already being written 2 years ago, back in November of 2018. A non-crypto site, the Fanatical Futurist blog, put out this article. Decentralized hedge funds take aim at Wall Street elite. Well, it's been over 2 years now, and that groundwork is laid. DAOs are ready, and specifically investment-based DAOs. Deep DAO tracks dHedge, and as we can see, funds flow into the investment DAO has been increasing steadily since the summer of 2020 launch. Going to the dHedge website, it's exactly that. Decentralized investment strategies and pools based on Synthetix protocol and synthetic assets, which is only Ethereum-based assets for now. Synthetix put out their 2021 Outlook blog, and in the assets section they said, if Synthetix is truly to become the place where you can exchange any asset, we must expand the range of assets offered. This includes expanded crypto assets and commodities, but most importantly, it requires expansion into equities. It goes without saying that this adds a number of challenges, including market closures, dividends, and regulatory oversight. However, Synthetix is now well positioned to deal with all these challenges, as it has evolved from an early stage project with numerous aspects of centralization to one of the more decentralized projects on Ethereum. So I hope the crypto Degens and maybe the few WallStreetBets Degens who watch me understand what will happen once stocks come to Synthetix and Ethereum. DAOs and strategies can be created that work autonomously. The power of the autonomous decentralized retail will be too much for these centralized hedge funds to handle. Gamestonk was just the beginning of this paradigm shift, the realization that it's possible. Now it's our job as the crypto crowd to educate these retail WSB traders about crypto, about Ethereum, about DAOs, about synthetic crypto assets, and how it will empower their own movement. But Synthetix Stonks, it's not here, you may say. How can we tell them about something that's not here? Well, Synthetix doesn't have Synthetix version of Stonks like Apple, Tesla, but Terra and Mirror do. December 3rd, CoinDesk covered it. Terra brings 24-hour trading to synthetic versions of stocks like Tesla and Apple. And they did this through the Mirror protocol. Going to the dashboard, we can see they have M synthetic assets for Alibaba, Twitter, Netflix, Microsoft, Google, and there's Tesla. Unfortunately, they didn't think about Gamestonk. Synthetic Finance 1.0 assets, they are here through Mirror, and with the Synthetix protocol launching their own version, 2021 is shaping up to be the year of the decentralized hedge fund. So, cryptocurrency boys and girls, we have our own little club, the Crypto Club, but it's time for the normies to understand it. It would have been wild if Mirror had synthesized GME, as it has 24-hour trading, while the normal Finance 1.0 outlets do not. It could have even more rapidly led to the downfall of Citron and Melvin. And that downfall is what we want. Financial Times knows exactly what is going on. They posted this article this month. Stress test looms for financial system in 2021. With the subheading, volatility rises as shadow banks become a bigger provider of liquidity to markets. And the article says, Michael Howe, managing director at Cross Border Capital, points out that in this more market-based framework, the provision of liquidity depends heavily on wholesale markets. Here the players, often shadow banks, are leveraged and part of complex networks of collateralized lending relationships. Shadow banks, he adds, mainly repackage and recycle existing savings. And Citron and Melvin are a part of this shadow banking network. And if you didn't know, it was that network who was the one who received the big majority of the bailouts in March and received a large majority of the funds. While WallStreetBets Degens and Crypto Degens, we got the peanuts, $1,800 for the entire year. But putting those peanuts to work with millions of people, Citron and Melvin know that story. Those that put those stimmies into Ether or Bitcoin, they know that story. So Chico is not expecting a snap of the finger, and tomorrow WallStreetBets is gung-ho on crypto. Slowly but surely, they will realize it because of educators, including myself. Cryptocurrency is finance 2.0, but it's a baby. Although this baby has its own Citrons and Melvins itself, and I can't wait until the Chico army comes together in a decentralized form to put them in their place. ChicoCryptoBets, cheers. I'll see you next time.